Good morning, everyone. I'm excited to be here with you as we begin part 3 of Bank of America's Business Financial Series. I'm Olivia Rios, Director of Operations and Programs at the Los Angeles Latino Chamber of Commerce. Today's topic is financial options for small businesses. In today's market, it's difficult for several businesses to get loans or means of financing. Today's session will provide you with options available through various means. Last week in part 2, we learned how to obtain loans in today's environment. And in part 1, we learned the key elements of building credit. So if you missed these sessions, you can always view them on demand on our website, lalcc.org. Today, our banking expert, Valerie Rivas, will share the alternative ways to access capital. At this point, I'd like to welcome Valerie Rivas, Vice President, Small Business Community Officer at Bank of America. And so good morning, Valerie.
I appreciate you having me here today. Daryl, thank you so much for having me here. LA Latino Chamber of Commerce. We appreciate your partnership here at Bank of America. And thank you everybody that has joined this morning. This morning, I actually wanted to start off a little bit different just because we just recently celebrated Women Entrepreneur Day. So I wanted to share a couple of things that Bank of America is doing to support our women small business owners and entrepreneurs. And the first program, I'm going to be talking over 4 programs today very quickly. And at the end of the session, I will go ahead and forward this over to Olivia, and she'll go ahead and send it over to the membership. So today, the first program I wanted to talk about is the Small Business Down Payment Grant Program. It's a down payment grant for up to $25,000 for a piece of commercial real estate in the LA County area. And you would have to go through Bank of America through one of our SBA programs in order to qualify. Must be a woman or identify as a woman, and also be a multicultural owned business. There's no certification needed. We don't need your grandma's birth certificate, nothing like that. We would just need for you to fill out a form identifying as a multicultural owned business or a women-owned business. Have to own at least 51% of the business in order to qualify. The next 3 programs are other resources that we have for our women entrepreneurs. And I also want to mention that there is more. And at the end, there will be a QR code where you can go and see additional resources. But I wanted to bring these 3 up because they've been the most impactful, especially the first one. So the first one is we created a partnership with Cornell University. So we partnered up with them for them to be able to provide a class and where our women entrepreneurs are able to gain the skills, knowledge, and resources that are necessary to build and manage a business successfully. And I've actually had a couple community partners and a couple business owners that I have helped in the last few months that have actually already taken the course, and I've gotten a lot of positive feedback. I've also been out in the community, and I've also heard that they don't even have a bank account with Bank of America. Of course, we want you to bank with us, but you don't need to. Bank of America will still pay for this course for women entrepreneurs. If you are interested in joining this program, you would just click on here once you receive this toolkit. This will be on page 6. And you can go ahead and sign up for the waiting list. So it should be a few weeks for you to be able to join this program. Very good program, have gotten very good feedback on it. Our second program is the Tory Burch Foundation Capital Program. We're actually a major sponsor for the Tory Burch Foundation. And what this program is for our women entrepreneurs. We are able to mentor them and then also give them a business network. As we know, networking is very, very important, especially when you are a business owner. And also, this program will also give them access to affordable access to capital options as well. So very good program. If you want to learn more about the program, go ahead and click on the link and you can learn a little bit more. Today, we're talking about alternative ways of financing, right? And one of the things that we have partnered up is with Kaiva Women's Entrepreneurship Fund. And what this is a crowdfund, and we will get into what a crowdfund is a little bit later today, but it's another way of you accessing capital. So the way that this would work is you would log in, put in your profile of the business and services that you do. And on there, you say, maybe you're trying to raise $10,000. So people will go in there and donate $15, $20, $10,000, $5,000. And then this would be given to you as a form of a loan, and you would pay back. So you can go on there. I believe it's 0% no interest. So go ahead and take a look on there and learn more information if this is something you're interested in. Now I'm going to go ahead and pull up our workshop. And while I'm doing that, I also wanted to introduce myself. For those of you that don't know me, I am Valerie Rivas, Vice President for Small Business Community and the Los Angeles County. A little bit about my career. I have been in the finance industry for the last 19 years, been serving small businesses and entrepreneurs for the last 13, and I have been with Bank of America for a total of 9 years. As far as my education goes, I started going to Cal Poly Pomona, and then I ended up graduating from University of Phoenix with a bachelor's in business management and a certification in human resources. So today we are going to be talking about financing options for small businesses, specifically alternative ways of financing. So sometimes when we think about financing and access to capital, we automatically think business loans. However, what I do want to let you know is not that business loans is not the only way to access capital. There's other ways which we will get into today. I already spoke about one earlier, about one of the programs that Bank of America is doing for our women entrepreneurs, which is crowdfund. So there's other ways that you can get alternative ways of financing. Now, why today is also so important is every year Bank of America does a small business report. And what that is we ask our business owners throughout the country how they're feeling about the economy, what their concerns are, what they would like to see from us, how we can also help them. And one of the questions that we always ask is if they're looking for a way of access to capital that year. And 83% of our clients that were interviewed, they all mentioned that they were looking for some sort of access to capital. So what that means is either maybe all of you that are here present today are looking for access to capital, or maybe 83% of you are looking for access to capital. So very important that today, which is why today is so important. Going a little bit over our agenda and what I'm going to be talking about is accessing capital, the 6 C's of credit. I don't know if you've noticed, but I've talked about this the last 2 workshops because this is really important for your financial picture. The most common financing options available, specialized financing, and alternative financing. Now, accessing capital, it doesn't matter where you are in your business, there may be a chance whether you're starting off or maybe you're a little bit more of a seasoned business, there's always going to be a need for access to capital. It might be because you need a piece of equipment, you might need some working capital, you might have some projects, or maybe you want to add a new division. Yesterday, I spoke to one of your members at the LA Latino Chamber, and they were looking for a new division, which I think is amazing, just staying very innovative. So there could be different reasons why you might need access to capital, hire an employee, whether it's short-term or long-term. Either way, we're here to help you and guide you on where you need to go for that. Now, getting into the 6 C's of credit, the first 5 actually do impact your credit. So when it comes to, what I'm going to go ahead and do is I'm going to go ahead and read, but then also give you an example so that we get a little bit of a better picture of what it means. So first, we're going to be going through capacity. So typically a business must generate $1.25 of excess cash flow after operating expense to support each $1 of debt service. This extra capacity provides a cushion for business to absorb unexpected expenses or an economic turn down. Now, I know it says $1.25. However, different programs could give you a different capacity, meaning giving you a little bit of a higher loan amount, such as SBA. So SBA may require 1.15 instead of 1.25. Or 1.10, depending on what lender you're using. It could also change as well, depending on the lender. So what this means is for every $1.25, for every dollar that you put into your company, after acquiring the debt that you're acquiring, we want to see $1.25 of excess cash flow. So that's would be with capacity. And I didn't mention that that's not always going to be, it's pretty standard throughout. However, there could be other programs that we attach to the loan and where it could give you a higher capacity, such as SBA. 2, capital. How much capital of what type has ownership invested in the business? Also, does ownership retain an adequate portion of that capital within the business? Capital, so typically in your business account, we want to see generally about 5% of your revenue. So let's just say that your revenue is $1 million, times that by 5%, we would want to see approximately about $50,000 in your bank account. If you have more, of course, that's great. If you have a little bit less, that's great. It's not a deal breaker, but it's definitely something that we take a look at. Number 3 is collateral. So banks prefer to secure debt with business assets, including accounts receivable, equipment, commercial real estate, and or inventory, all of which may be used as loan collateral. So very important that when you're going to your lender, you let them know what you're going to be using the funds for. Reason for that is depending on the collateral, we have different products. Some might be a little bit more streamlined. Some of them might ask for a little bit more documentation, but then also the terms and also rate could also vary depending on the collateral. So you think about the stronger the collateral that you have. So for example, a strong collateral, I would call a piece of real estate, right? That's a huge investment, right? So with that collateral, we could get you better terms. So let's just say that you come into the bank and say, Valerie, I want $1 million, and you don't tell me what that $1 million is for. Valerie's going to give you a 10-year term. And that's probably just because the maximum term that we can go. Now, if you come in and say, Valerie, I want to purchase a piece of real estate for my business to move in to the piece of real estate, then I would say, okay, in that case, we can give you a 25-year going through SBA program, or potentially going conventional, maybe we can give you a 20-year. But as you could tell, going from a payment of a 10-year term versus a payment of a 25-year term could really make a difference, especially in the interest. And not only that, but also in the term, right? Your payment would be a lot lower if we amortize that over 25 years versus 10 years. Number 4 are conditions. How do various market conditions, including the economy, industry trends, and environmental factors, affect the business prospects? So I've always told the story that back in 2007, I opened up an escrow company. Very, very big mistake. I didn't do my homework. I just thought it was something additional that I could add to the family business. And in 2008, the market crashed. So guess what? That business is no longer there. So very important that when you're looking for a new venture, looking for something, or even in the industry that you're in, that you know the market conditions of that industry. Another example is there's some businesses during the pandemic that did really, really well, but then there was others that did really, really bad, right? So that's something that we also take a look at what your market conditions are and what you're going to do to mitigate that. So in the event that you do encounter some bad market conditions, what are you doing to prepare for it? The underwriter will want to know how you're going to mitigate that. Number 5 is character. Lenders may evaluate business-related attributes like an owner's experience, knowledge, financial competence, personal credit history, and future business plans. They may also look at other individuals who are tied to the success of the business. So what this means is I always look at it as a small business owner. In a way, it's like one pocket to the other, right? Because it's your business, it's your baby. So when it comes to character, we're going to take a look at how you handle the personal side, because most likely, since you are the person running that business, you're most likely going to run your business, you're going to run your business somewhat similar, right? Because it's the same person, it's the same character running the business. So very important that you take care, as a business owner, that you take care of your personal and your business credit, because that gives us pretty much a history and also the relationships that you've had with other lenders. Number 6 was added not too long ago, and it's communication. A business owner's willingness to communicate with their small business specialist is essential to building a productive relationship. The more they share about their history, goals, and priorities, the better positioned they'll be to secure capital. So very important that at least once a quarter you communicate with your banker and let them know of your plans and goals for the rest of the year, or even your short and long-term goals. And the reason for that is not only can your banker guide you on maybe when the best time could be for you to do this move, sometimes the banks and lenders, we have certain promotions that come up. So in the past, we've had where the commercial, if you're looking for a piece of real estate, commercial real estate, we've had where the origination fee and also the appraisal fee is waived. So with that, it could save you about $5,000 or more just in that, right? So very important that you communicate with your banker what you're trying to do. Personally, me as a banker, I had a spreadsheet of my clients' names and also what their goals were and things that they wanted to purchase throughout the year. So that way, if there was any type of promotion that came up, then I was able to give those clients would be the first ones that I would give them a call and let them know, hey, right now is a great time to buy a commercial property. Right now, we are waiving the origination and whatever the promotion is, but they would be top of mind because I was constantly meeting with them. Now we're going to talk about financing options. So the most common options for small businesses are the 3 below. And the first one is going to be business credit cards. So business credit cards are typically just used for your operating expenses and everyday purchases for your business. The things that I like about credit cards is when it comes to the cash flow cycle, you actually are able to delay your payables. What that means is when you slide that business credit card, not only do you have about 15 to 30 days to pay us back, but you're also paying it back at no interest. So the way typically that we recommend as a good banker is for you not to carry that balance. What does that mean? That when you, let's just say you charge $500, when you get that statement, go ahead and just pay that $500. Benefits to that, you're one, delaying your payables, you're also able to pay no interest, and cherry on top is always that some of these business cards also have rewards, so you end up winning. So there's also other benefits that are on here. It says easy to track expenses, easy to manage employee spending, fast access to cash, which I wouldn't necessarily recommend that since interest rates are really, really high on that. And then we talked about the rewards. And then also very, very important is going back to building credit history for the business. And also making sure that you are also working with a lender that where you have a business credit card that does report to Dun & Bradstreet. So that way when you're read your credit for any type of loan, you want to buy a commercial property, a working capital and equipment, then you have some sort of business credit established. Some key considerations is the interest rate, and it's also not suited for long-term borrowing. Again, going back to the interest rate, I wouldn't necessarily say that that's important if you're unless you're really looking to carry the balance, which sometimes that does have to happen because of cash flow. Business line of credit. Lines of credit are designed to help manage short-term cash needs up to 1 year and provide access to cash to manage business cash flow. I don't know if any of you have recently gone to inquire about a line of credit, but a lot of lenders are shying away from this. And the reason for that is because they're a little bit of a high risk. So if you don't know how to leverage a line of credit, you can end up paying a lot of interest. So some of the benefits is flexibility to manage seasonal fluctuations in cash flow. So for example, let's just say the pool businesses, right? The ones that come and clean. They are typically really, really busy during the summer. So this could be something that they can leverage during the during the winter, which is slow season, to be able to manage their cash flow. Lower short-term interest rates than cards. So definitely there's no cash advance fees. Typically there's an annual fee. Sometimes it's waived, but there's no there is no cash advance fee. So if you're looking at a credit card, that could be, nowadays 20, 25, 30%. And when you do a cash advance fee, Whereas a line of credit, you wouldn't have that cash advance fee. This is also good for if you have any suppliers or vendors. Sometimes they give you vendors credit. Like if you come and you pay cash, sometimes the vendor will say they'll give you a 10% discount. If you do have a business like that, you may benefit out of this type of program. In addition to that, if you have any accounts receivables, meaning that you have some sort of agreement of they will pay you back in 30 to 60 days, that could also be another way that you can leverage a line of credit for your operating expenses. Some key considerations is if it's secured or unsecured, meaning that one, if it's secured, meaning that you put in money to have that line credit. So there's some clients that want to establish some business credit and they want to have that trade line on their business credit. So what they do is they want a line of credit for $100,000, they deposit $100,000 and we give them a line of credit for $100,000. Or it could be unsecured where you don't have to put money in it. Annual and origination fee. As I mentioned, sometimes these are waived, but in the event that they're not, you want to make sure that you know what your annual fee is and if there's any origination fee to get the line of credit. And reason for that is because sometimes the client at the end of the year will get charged the annual fee and they're a little confused as to what it's for. So very important that you ask those questions. It might be in your disclosures, but you just want to make sure that you are aware so that way you can do your budget as well. Variable interest rate. So that's something else. It typically goes for prime rate. So right now, prime rate is at 8.5. So you figure sometimes they'll say, it, depending on what prime rate, that's what pretty much the interest rate will be or more. So you have to take a look at the terms. What are the terms? It could be prime rate +2. It could be +1, just depending on what you agree on or your lender gives you. Make sure that you are aware so that way when you are using the line of credit, you have an idea of how much interest you're paying. There's no fixed payment schedule. So right now, shortly, we're going to be going through business term loan where there is a fixed payment schedule. In lines of credit, it really just depends on how much money you use. So if you don't use it, then you don't have to pay it back. But that's if whatever you use and you do have a balance, then you would have to pay that back. And usually it's a percentage that the bank will calculate based on the amount that you owe that you would have to pay back on the minimum payment. And then typically the lines of credit, they're reviewed annually for renewal. So we want to make sure that the business is in good shape, that they have healthy cash flow. So it is normal for them to ask for financials or P&L and balance sheet at the end of the year or extra documentation so that you can continue renewing the line of credit. Now we're going to go into business term loans. Term loans are often used to finance the purchase of business assets or to finance business expansion over a period of time. So typically these are used for fixed assets or business assets, or it could also be used for equipment, working capital meaning that you may want to do some hire employees or get maybe some new computers or furniture. It could also be used for commercial property. So very, very important that when you come in to the bank, you let them know what you're going to be using the funds for so that we can appropriately guide you. Sometimes clients come in and they say, Valerie, I just want, some cash or a loan to do my operating expenses. You may not have to go through all the trouble of getting $5,000 and providing all the paperwork when you can maybe do a business credit card. And in addition to that, we just want to make sure that we put you on the right program and we structure it appropriately for you. So some of the benefits of business term loan is fixed interest rate and rate options, structures with predictable payment schedules, fixed numbers of payments, and payment amount doesn't vary when interest rate is fixed. So if you take a look at line of credit, that goes based on prime rate, right? So as prime rate change, for example, I think last year, I forgot how many times prime rate changed, but or earlier this year, I should say, it was crazy, right? So as prime rate changes for a line of credit, you would have a different payment. When it comes to a business term loan, you would actually have a fixed payment. So let's just say that they give you $100,000 and your payment's $1,200 for the next 10 years, you know that on year number 10, you will pay off that debt. With a line of credit, you have a $100,000 balance. If you're paying the minimum each month, even if you pay for the next 10 years, you're not going to pay that because it's a revolving credit line. And the interest is paid different on that. Now we're going to talk about financing options. So the first one has been really, really popular, especially because of inflation, and they have better terms where your payment will be a little bit lower. So small business administration loans are available through SBA-approved lenders, which include many major banks. So Bank of America, Wells Fargo, most of us are all SBA lenders. If you are looking for, so here's the thing about SBA also. So SBA has their own program, but the lenders might put additional guidelines on top of that. So sometimes if you go to a lender and you want a startup loan, they might not be able to offer it to you. So you could always go to sba.gov to see what other lenders are SBA approved that might have the program that you're looking for. So these loans typically give access to higher loan amounts for financing a range of business needs. Now, earlier when we went through the 6 Cs of credit, we talked about capacity. So this program would give you a higher capacity because they require for every dollar you put into the company, it could be $1.15 that they would require of excess cash flow after you acquire your debt. So as you can see, instead of $1.25, it goes down to $1.15. They also require low down payment. So very nice of this when you go into the bank and you want to purchase a commercial piece of property, they typically will ask for 20% down. Now, if you are buying a piece of property and you go through the SBA program, we will require 10% down. So you can see how you can keep a lot of your cash if you go through an SBA program. We talked about features easier qualifying conditions. So sometimes you might have those little tinks in your credit report or on the business credit report. This program may overlook some of those, so it's a little bit better to it's a little bit easier to qualify. And then also we talked about the longer terms of other type of small business loans. So for example, if you come into the bank, you have to go conventional, meaning that SBA doesn't have anything to do with your loan, then we would require, maybe the most that we would be able to give you would be 20 years when it comes to the term. Now, if you go SBA, we would be able to give you 25 years. Three core SBA programs. So the first one is SBA 7A. Usually these are capped at $5 million and can provide financing for just about any business need. So a lot of the times it'll be for equipment. It could also be for commercial. It could be also working capital. It could be for equipment, big, huge machinery. So it could pretty much be used for anything up to $5 million. The 504 also goes up to $5 million, but it's only used for commercial real estate and large equipment and machinery. So it could be maybe the equipment costs $1 million. So maybe you may want to consider a 504 program. Or it could be that you only could put 10% down on your commercial property. So we would go through an SBA 504. Now, what does 504 stand for? 50%. The lender would assume responsibility, 40% would be SBA, that would be going through a CDC, and then the rest. So if you notice, that's 90%, and then 10% is the down payment. SBA Express is capped at $500,000. So if you notice, this is for smaller loan amounts. Recently, we added that we are able to also use this for real estate. That program was not available before. Very hard to find in California. However, if you do find one, we could potentially go through an SBA Express. It's a little bit more streamlined. We don't ask for as much information or documentation or collateral. Sometimes in the 504 program, they will ask, it is normal for the lender to ask for a life insurance or your home as collateral. So that's something that they will ask. So don't be alarmed. It's something normal that the lenders will ask for when it comes to a 504 program. But when it comes to SBA Express, those are for the smaller loan amounts. It could be small equipment, working capital, or the smaller owner-occupied real estate. Specialized financing. So we talked about commercial loans, commercial real estate loans. So there's a variety of different options for this one, including the SBA program. So we mentioned SBA program might give you a lower down payment and also give you a longer term. Conventional, meaning not going through SBA, they typically will require 20%. Equipment loans, these are used to fund industrial, specialized, or general purpose equipment, as well as commercial purpose vehicles. So also very important that you tell your banker what type of commercial vehicle you're getting, because sometimes we're able to put that through a business auto loan. So a business auto loan is very, very similar to when you go to the dealership and be able to get financing. So if you think about it, it's pretty much like a credit card application. Sometimes they will ask you for pay stubs and things like that. So that kind of gives you a difference between getting an equipment loan, which they may require 2 to 3 years of business and personal tax returns and other documentations that come along with it. So very important that you let them know if it's a vehicle, a business vehicle, because we might be able to put it through a different type of a program, which would be a little bit more streamlined. So with equipment loans, typically these could go 5 to 7 years when it comes to shorter terms. But then also if we go through SBA, we could potentially do up to 10 years depending on the lender. Now we're going to talk about practice loans. So practice loans is for those that are in the healthcare business. So that would be our dentists, our medical doctors, and our vets. So for them, typically, we talked about earlier about conditions, right? So conditions when it comes to healthcare professionals, typically they're out there in our community making sure that our teeth are healthy, we're healthy, and our pets are healthy, right? So that's something that's very, very safe industry. And why is that? Because it is pretty much economy safe, right? So it doesn't matter where we are in our economy, we're always going to need them because we're always going to have tooth pain, we're always going to need our teeth clean, we're always going to need going into the doctors for our regular checkups. So because of that, their conditions is very, very safe. Now, I think it's about 8 out of 10 doctors always succeed in their business. So what that means is we talk about risk with the lenders, they're okay to lend up to 100% for even those startups, 100% financing, which is amazing, right? But you got to also consider the conditions of these healthcare professionals. So this could also include if they're starting up, or it could be maybe they want to acquire another practice, which this doesn't just pertain to practice loans. But if you think about it, you can easily grow your business by acquiring a business just like yours by buying another similar business like the one that you already currently own. So a doctor may come in and say, Valerie, you know what, my good friend is retiring and I would like to buy his practice. So we would be able to finance that as a practice acquisition, or we might be able to provide also working capital loans. It could be maybe that they want to upgrade their equipment, that small equipment that doesn't have a VIN number, or it could also be that they have plans to hire new employees, maybe tentative improvements that they want to do to their office. Some of these offices, they want to make sure that it's clean, recently painted so that it looks clean because they all have healthcare professionals. So that's something that we would be able to provide as well. Now, alternative financing. This has become very, very popular lately, especially because there's a lot of people looking for access to capital. So you may go to a bank and you might not be able to get financing, right? And so what happens? These major banks such as Wells Fargo, US Bank, ourselves, All of the major banks, we all donate to community development financial institutions. So we support them to help those clients that we're not able to fund here at the major banks. So they provide access to capital through loans, grants, and programs to historically underrepresented communities and organizations to foster entrepreneurship. They can provide more tailored resources that our traditional banks can be great options for startups as well as established businesses. So let's just say that you come into one of the major banks and you say, I have this new idea. I want to get funding for it. I need a startup loan. I need $100,000 so that I can go ahead and start this new venture that I just thought about. I have an application ready, and I think that this is really going to kick off. So typically, the major banks are not able to fund that unless you are a healthcare professional. Unless you already have some sort of experience in that industry, then it's something that we would consider. But for the most part, if it's a brand new idea, it's a startup loan, then you would have to go through a community development financial institution. These institutions are out there for the development of the community, hence the name, right? And these are government funded. So those funds are coming from the government and financial institutions like ourselves and organizations that support community development financial institutions. So it could also come from the city, but these are all funded by the government and funded by the major banks. Now, just so you know, there are different, they call it CDFIs, community development financial institutions. So there could be CDFIs that can lend you, they could lend to micro businesses. So it could be maybe that you only want to borrow. I've had clients come in and say, Valerie, I only need $300 to start my business. And there are some CDFIs that will lend as little as $300. And they can lend up to maybe $10,000 because maybe that's their specialty. There might be other CDFIs that specialize in commercial property, some of them that specialize in nonprofits. So you want to make sure that you go through to the appropriate CDFI. Bank of America actually earlier this year created something called Access to Capital Directory. And what that is, it's a directory for accessing capital. But in addition, it also has different resources that are available out there. So with these different 4 programs that I'm going to go through right now, typically they will ask for a business plan. A lot of the major banks, they won't ask for that because we will do a business plan for you when we present it to the underwriter, but it's always also nice to have so that you know the direction that you're going, your goals, and you are able to stay true to your plans. Minority Business Development Agency, so part of the U.S. Department of Commerce, and is solely dedicated to helping diverse-owned businesses to grow. The agency provides a variety of financing options to entrepreneurs, such as grants and access to venture capital, specifically geared towards diverse-owned businesses. So this is another type of agency that is providing access to capital as well. And sometimes we don't think about these things or know that it exists also. So again, these programs typically do require for you to have a business plan. There are nonprofit organizations out there that will help you build one. Also, we have templates if you want to do it yourself that will guide you on how to build one as well. Local regional funding. So funding is often available from regional-based organizations, specifically geared towards business owners. This includes opportunities provided by your local or state governments and also local credit unions and banks. I talked about the Access to Capital Directory for Entrepreneurs created by Bank of America and Seneca Women is a great place to begin this research. So I will also, the toolkit that I talked about earlier that has all the different resources or a lot of the popular resources on there, it'll also have a link to the Access of Capital Directory. Now, like I mentioned, on there you can find grants that are available to you, and you could also find different CDFIs, minority business development agencies, crowd funds, different types, alternative ways of funding. There's equity funds also as well that you could also find on there. So we created this so that we can streamline everything instead of having to call different lenders. So it's there for our community to be able to log in. Anybody can use it. If you Google the Access to Capital directory, anybody has access to it. The last one is grants, which is amazing because these don't have to be paid back. So while looking for state-based grants and loan largely depends on what's happening locally. The best place to look for federal grants is through grants.gov. Grants.gov is a centralized website where federal agencies post available funding opportunities for grant seekers to find and apply. So grants.gov is actually a really, really good resource if you're looking for something reliable. Some of these grants may not be reliable. Some of them, they may ask, or they might be also a scam. So in order to avoid all that, if you are looking for grants, you can go to grants.gov. Earlier this year, I did a panel discussion with another nonprofit that supports women-owned businesses. And one of the ladies that was on there, she said, Valerie, I don't want any loans. I've made it a point to apply for grants, and that's what I do most of on my free time. And my goal is $1 million. And she already at the time had $750,000. So it is possible. And this is money that she doesn't have to pay back, right? She will get a 1099. So, you can work with your accountant on how to offset that. But this is something that she's doing, and I haven't followed up with her actually, but I'd like to know where she's at now. But this is back during the summer, and yeah, she was already at 750,000. So it is possible. Grants are out there. They're available based on demographics. They're also available on different things. So take a look at grants.gov to see if there's anything on there that you might be interested in. And yeah, so that's grants. That would be for grants. Now, recapping, and in the meantime, you can go ahead and start exploring these QR codes. And so today, we talked about the type of financing that best is for your company, depending on how much is needed and if it's needed for short-term or long-term. So make sure to talk to your banker, or your accountant is also another source of guidance that you might be able to turn over to. Most common options include business credit cards, line of credits, and term loans. So we talked about, talking to your banker, making sure that we know what the funds are used for. So, and sometimes we might give you different suggestions for different things that you might need the money for. So we talked about operating expenses might be really good for business credit cards, and also how to delay your payables and how to avoid the interest. And then we talked about if you have account receivables, how lines of credit might be the best suitable for you. Also, term loans, depending if you're looking for equipment, type of real estate, those would also be other options. The SBA has a variety of options, which include longer terms and smaller down payments. So we talked about capacity, right? How SBA could give you a higher loan amount, a higher capacity for you to borrow, because it's just a little bit more flexible on the terms and give you longer terms, so that meaning that you would get a lower payment, improving your cash flow as well. There are also specialty lending options available. So we talked about equipment, commercial real estate, and healthcare providers. So very important that when you're talking to your banker, that you let us know what you're going to be using the funds for, so that way we can appropriately get you on the right program. We talked about the alternative options that exist. So we talked about the CDFIs that are meant for the development of our community, MDIs, local funding, as well as grants. So we talked about the different ways that you can access capital. Also, crowd funds. Crowd funds is another way. And I'm sorry, I did promise you that I was going to talk to you about that. So crowd funds is literally crowds that go in here and they donate to create a loan. So let's just say that Valerie is opening Valerie.inc, and I list what my causes, what my services are, and I have to raise $10,000. So somebody might come in and say, you know what, I'm going to, in this crowd fund, out of this $10,000, I'm going to donate $1,000. Somebody else might come in and donate another $5,000. Somebody else might come in and donate the rest. And then that would create a loan. So then you're given this loan, and then now you paid that crowd back. And that's a different way of accessing capital. So Kaiva is one of those options. So, but there's also crowd funds that you can also find through Access to Capital Directory. And of course, your capacity to repay. So we want to make sure that you do have the capacity to be able to pay us back. And if that means that you have to go through an SBA loan to be able to get access to capital, then that's what we would have to do. Working with an advisor. So I've always said it's very, very important to have a really good relationship with your banker and your accountant, and to meet on a quarterly basis so that we know what your plans are and what your goals are in the direction of where your company is going. So with the rise of alternative lending, traditional bank business loans are no longer the only option for small businesses. The key is knowing where to look. I gave you a resource today, and I gave you the Access to Capital Directory. You could easily just Google it right now, and you'll have it'll be at your fingertips. So working with an advisor helps make search easier. Now, if you want to learn a little bit more about Bank of America, we have 3 QR codes here at the bottom. So the first one will have small business resources, kind of like the ones that I talked to at the beginning of the workshop. Those programs will be in there. You'll also find additional programs and partnerships that we have. We have partnerships with Vistaprint, LegalZoom, InkFile. So all those partnerships on there will be there as well, and different resources and discounts that we have available for our small business owners and entrepreneurs. And then on the second QR code, if you want any additional classes, maybe you want something to know more about home ownership, that could be something that you can go in here and how to prepare for home ownership, or buying a vehicle, or different better money habits or financial literacy is available through our second QR code. And then the last one is access to free learning. So there's some of the webinars that we have pre-recorded already, similar to the ones like today with different speakers. So you can go in there and sign up for a live one or a pre-recorded one and just listen at your own time. I know I've done that in the past and listened to webinars in the middle of the night when I can't sleep, and it's just something maybe pressing that I wanted to prepare for, or something that I want to get better at, because financial literacy is definitely something that's learned, and it's a skill that you learn. So if you want to learn any additional webinars, then you can definitely go through the third QR code. So I believe we have about 15 minutes.
Yes.
So I don't know, I'm going to go ahead and open it up for questions.
Well, thank you, Valerie. I am looking at the chat, and we don't have any questions, but this is the moment. We have an expert here with us with Bank of America that is kind of guiding you through what you could do with your business to kind of level it up. So I did write some questions down. So loans to start a business, because I get this call quite frequently. Olivia, does the LA Latino Chamber have money to help me launch a business? Well, I know part of it is skin in the game. They don't know where to go. They need resources. They don't even have a business plan. And so it makes it really difficult to kind of guide them, because they want to use someone else's money to pretty much support their dream. But Bank of America or SBA has loans that are pretty much funded for practices towards the, I guess, like dentistry, doctors, and the health area?
Yes, so we do have a specialty program here with our practice solution team, and they are actually able to fund doctors, dentists, and vets. I believe they have to be a year practicing. Carlos, can you remind me if it's a year that they have to practice at the hospital before we can lend on them?
It depends on their specialties. For some, yes, it's a year. For some, actually, the day after they're done with their residency, the bank will lend money to them.
So these are some of our specialty. This is a specialty department that we have. So it's through our practice solution, and we have a heartbeat program where we help them with the marketing. We also help them with their startup costs. If they want a commercial building, we'll finance them up to 100%. These are for our healthcare professionals. And something that is not on there, but we also do have, is our franchise team. So if you're looking for a UPS, Napa, Big Old Tires, as long as they're in their SBA approved list, we should be able to fund them as well. So we do have that specialty with franchise. So if anybody's interested in a franchise, we have that department also. And their qualifications are a lot different. So, it could be 10% down, but we might be able to get somebody that doesn't have experience in that franchise as well.
And then the next question, can I get the links to grants? So that would be grants.gov, correct?
Correct, yes. That's the most reliable that you can use. In addition to that, with the Access to Capital directory, like I did mention, you can Google it. It's available to everyone. You don't necessarily have to bank with us. And on there, you'll also find other grants that are available that we as a bank vouch for and trust. So either one, they're one of our partnerships. We either have a partnership, just like we have a partnership with your chamber, or it could be somebody that support or we just vouch for. So Access to Capital directory, Bank of America is vouching for anybody that's in there.
All right. The next question, where can we access the Access to Capital directory?
So I will go ahead and forward the toolkit shortly where you can send it to your members and constituents.
Okay.
But in addition to that, you could just Google Access to Capital directory and you have access to it right there at your fingertips.
All righty. Next question. In reference to the equipment vehicle loans, does the vehicle need to be over 6,000 pounds?
It does not. Now, when it comes to accounting and taxes and things like that, I know that there may or may not be certain speculations and things like that, but you would have to talk to your accountant when it comes to the tax portion of it. For us, it does not have to be over 6,000 pounds. We could potentially put it through our Business Advantage. What is it called? Business Advantage Auto Loan program that we have, which is pretty streamlined. Typically, if you give us the VIN number, make, and model, we're able to check with our team whether or not we could put it through that streamlined product.
All righty. And lastly, is there a link for different crowdfunding lenders?
I don't have a link for that. However, if you're looking for crowd funds, equity funds, different type of funds, you can do the Access to Capital directory. And on there should be a drop down and it'll ask you different things. So it'll ask you if you're looking for grants, crowd funds, things like that. And it'll give you different options that are available. So there's different ways of access to capital on the directory as well.
Do you have recommendations for a professional services business? I'm a sole practitioner architect looking for cash flow.
I would need to know a little bit more. So I'd be happy to share my contact information and do a one-on-one, or also Carlos is on the line here. We could both help and guide her where she needs to go. We might be able to fund her here, or we might be able to recommend somewhere else to go.
Also, thank you. And then if you could review, Valerie, some of those programs that are in grant opportunities that you talked about at the start of our program.
Yeah, of course. Can you see my screen?
Mm-hmm.
Okay, perfect. So for those of you that want a one-on-one, here is my contact information. So if you want to take a quick picture of it, I'll allow a minute for that to happen. And then earlier, what I was saying is in celebration of Women Entrepreneur Day that just happened on November 19th, which I believe was Sunday, I wanted to bring up what I did earlier today is I brought up a few programs that our women entrepreneurs and businesses can actually take advantage of. So I'm going to be going through, I'm going to go through all five of them that support our women entrepreneurs. And then for those of you that have to go, because I know we're already at time, then you can as well. You can drop off if needed. But this will also be recorded, I believe. So the first one is our Small Business Down Payment Grant Program. And this is in support for our women-owned and not only women, but multicultural-owned business. So we don't ask for your grandma's birth certificate, mom's birth certificate, or anything like that to certify that you are multicultural owned or women owned. You just have to identify as multicultural We don't need any type of certification, and this is a grant payment that does not have to be paid back. This is something that Bank of America is doing so we can get business owners into commercial properties in the LA County area specifically. And you would have to go through an SBA program and also own 51% of the business and identify as a multicultural or women-owned business. And this is for a specifically commercial real estate property. So the business must be moving into this commercial property to be able to qualify for this program. And then here are 3 programs that have been very, very impactful to our women entrepreneurs. So the first one is Bank of America. We partnered up with Cornell University, and this is a program, a 6-week program with Bank of America is paying for it 100%. I've been out in the community, and when I present this, women have told me, they're like, oh, by the way, I don't bank with Bank of America. I don't have a credit card, never had anything with them. I solely bank with Wells Fargo, and Bank of America paid for it. I'm very, very grateful, and it's a very, very great program. So I've had some of my clients and also some of my community partners that have taken this because they've taken a look at new ventures that they want to start up, and they said that they learned a lot. So this program will give you the skills, knowledge, and resources that are necessary to build and manage your business successfully. So very good program. If you want to learn more, when you get this toolkit, you can go ahead and click on here, and then it'll take you to signing up for the waiting list. We also are a major sponsor to the Tory Burch Foundation Capital Program. This program helps women entrepreneurs with different obstacles. There's a mentorship program that you're assigned to, and then also you get offered affordable ways to access capital, and also gives you access to an amazing business network. So as we know, as entrepreneurs and business owners, it's very important for you to have your network, and you would be able to get a business network on here that you can pretty much tell everybody what you do, so that you can get those, so you can get some clients out of it as well. So pretty good way to help grow your business. And then Kaiva is an alternative way of financing, which is the entrepreneurship fund. Okay, so Kaiva is another way of alternative way of getting financing, which is a crowd fund. So like I mentioned, it's literally crowds that go in here and they say they want to donate to this cause. And then once you fulfill, so let's just say that you're looking for $10,000, somebody gives you $1,000, somebody else gives you $500, somebody else gives you the rest, that would become a loan. Now you have access to capital in the form of a crowd fund. So then you pay that crowd back, and that's how you would raise money to be able to get a crowd fund. So if you want to learn more about this program, you can go on here and learn more on how to sign up for that. There's also the Access to Capital directory here, or like I mentioned, you can Google it as well. And there's InkFile. We have a partnership with them, so we have a nice little discount if you want to incorporate. If you're a sole proprietor currently and your accountant is recommending for you to do an LLC or corporation, there's a nice little discount there. And then also Vistaprint, 30% off on your marketing essentials. So that could be business cards, banners, things like that. And then if you don't have QuickBooks and you want to use QuickBooks, or you're brand new to QuickBooks, you could actually get 30% off your monthly subscription for the first 12 months. So that's something else that we're doing. For our veterans, we're actually offering 25% off certain loan fees and discounts as well. We talked about a practice solution where members get a 50% discount on certain loans, and also we're able to finance them up to 100%. And we also have discount for our clients for any payroll services too.
Okay.
This one here is Marketplace by Seneca Women. And what this is something we created in celebration of Women History Month back in March. So really cool deal. What this is a marketplace that has exposure worldwide. So for our clients, or if you're a member of one of the community partners, such as LA Chamber of Commerce, we can nominate you to be into this site. So some of the things that we require is for you to be able to accept credit card, have a website. It does have to be retail. We haven't opened it up to any other services. You do have to have a retail business and be able to ship worldwide, and also be able to take credit cards worldwide. So be able to take international cards.
So how does a member of ours get to be on this list? Is there a location where they can apply and you, I guess you go through a vetting process for them to be on here?
Yes, so you would nominate them. You would nominate them as being part of the LA Latino Chamber. And since you are one of our partners, they would have to be one of the members that supports you. And we will probably need their first name, last name, address, and how many locations they have, their website, phone number, and we can get started there.
Okay.
And then I would submit that over to, or they could actually click on here and learn more and sign up, or you can give that information to me. I'll send it to my team that it's being nominated by one of our community partners and see if they're eligible and, go through the process.
Yeah.
Fun fact, I was presenting this a few months ago to Novel, and I believe it was the owner of, Bixie Chocolate was there and on the call, and then one of their friends owns Bash and Sass and didn't even know they were on here. So I thought that was pretty cool. I always get excited for things like that. Then that's something else that we're doing for our women-owned businesses. So these have been the most impactful, especially because of Women Entrepreneur Day. I wanted to bring these up specifically to celebrate women.
Thank you for your time and everyone who remained on the webinar with us. So on behalf of the Chamber, our Board of Directors, Corporate Advisory Board, sponsors, and members, we wish you a happy Thanksgiving.
Happy Thanksgiving, everyone. Enjoy it with your families and looking forward to seeing everybody next week. Thank you for having me today.
Thank you so much, everyone. All right, goodbye.
Thanks. Bye-bye.